Hello everyone, welcome to my YouTube channel. My name is Daniel, and on this channel I talk about personal finance, investing, my strategies for saving money. If this sounds like your type of content, please subscribe and give this video a like. Today I'm going to share with you all how I was able to purchase a brand new home in San Francisco for $220,000, roughly 80% off of the market value. I promise this is not clickbait, and my goal for this video is to shed light on a little known program in hopes that other people can take advantage of it. Alright, here's a quick tour of the property. Alright guys, so because of COVID, a lot of the common areas in my building are closed off, so I wasn't able to shoot a lot of stuff. And also I don't want to walk around my building with the camera. So I found a bunch of these photos that I was able to post up here. Maybe if you guys want, I could do a proper tour one of these days, but yeah, this is where I live. Alright, we're going to jump right into it. For today's video, I'm going to walk you guys through how I was able to purchase a brand new home in San Francisco for $220,000. There's a little known program in San Francisco, as well as numerous other cities throughout the US, called the Below Market Rate, or BMR program for short. The program I'm going to be talking about specifically is for San Francisco, but a lot of this information will carry over to different counties and cities throughout the US. Essentially, what this program does is it makes it so building developers have to section off a certain percentage of new development for this program. And they're not a lower quality home by any means. You're getting the same property that you would if you paid full price. The BMR program has both rental and ownership offerings, but for today's video, we're going to be focusing solely on the ownership piece. These programs are still very new in the real estate world and mostly unknown to most prospective home buyers. To kind of show you guys how unsaturated the BMR scene is, when I applied for the program a handful of years ago, about 70% of the homes that I applied for, I was selected for. At the time of me making this video, I took a look at the home listings in SF for the program, and I saw that a lot of the properties were still accepting applications past the original deadline. That indicated to me that either they weren't receiving any qualified applicants or they weren't receiving any applicants at all. And I'll have detailed links to everything I'm talking about in the description below, but for now, I want to jump into how you guys can apply for the program and how you can qualify. All right, so first I want to talk about how you guys can qualify for the program, and believe me, it's a lot easier than what you guys might think. Number one, you have to be a first-time home buyer. Now, that doesn't necessarily mean that you haven't owned a home in the past. Maybe you decided to sell a home, to live in a different city, or travel. As long as you haven't owned real estate in the last 3 years, you can still qualify as a first-time home buyer. Number two is you intend to live in the residence as your primary home. Number three is you complete a short home buyer's education course through your county. It teaches you about things like credit, debit, how to manage your income and expenses, and is really geared to making sure that you're able to transition into home ownership successfully. The courses are usually free and in a small community setting. Mine's took place over 2 days and was a total of 10 hours. Again, I'll leave a link to the course that I took and that I highly recommend. Now, I think the main hurdle for most people is going to be the maximum income limits for these programs. So the BMR program was put in place to help people who maybe would not be able to own these properties or live in these cities otherwise. With that being said, the income limits are surprisingly high, especially for the Bay Area. Here's the max income charts for SF in the year 2020. From what I've seen, the income limits for BMR ownership will be anywhere from 80% to 120%, with the majority being at 100% AMI. For single individuals, that means that you can make over $107,000 a year and still qualify. For couples, that limit can be up to $123,000 a year. And from what I've seen, the income limits will generally go up about $5,000 a year. Lastly, the city will also take your savings into account when calculating your income. Let me explain how that works because it's a little bit complicated. Okay, let's say you have a total income of 50 grand. And you also have 100 grand in savings. So the city will exclude the first 60 grand in savings. All right, so 50 grand in income, 100 grand in savings, and the city's gonna exclude the first 60 grand, okay? So 100 grand minus 60 grand is 40 grand. And this 40 grand is what's going to be used to calculate your new income with your savings taken into account. And the way the city will do this is they'll take 10%, multiply that by 40 grand. That equals 4,000. And that's what's going to be added to your income. So your new income is going to be 50 grand plus 4 grand equals 54 grand. This number will be your new income with your savings taken into account. And if you have less than this $60,000 number, then you don't need to worry about this asset test calculation. And there are also the normal financing requirements that you want to be able to meet as a prospective home buyer. Things like having your debt to income ratio in check, having at least 3% down payment, and other things that you will need to get pre-approved by a mortgage lender. From there, all you have to do is fill out applications for the properties that you're interested in. You can do that online and they're pretty straightforward. I'd recommend applying to a ton of them because you won't get into every property that you apply for. But hopefully this way in the end, when it's time for you to make a decision, you're able to pick and choose what type of properties and neighborhoods that you want to live in. Now that we understand the process, I want to shed some light into some of the questions that I get asked most frequently by friends and family and people who are curious about the program. So remember, these properties are intended to be your primary residence. So that means that the city prohibits you from renting out the home, and that includes things like Airbnb and Sonder. Also, when it's time to sell the home, you won't be able to sell it at market value. Now that doesn't mean that you won't make a profit, because you most likely will, but remember, because you bought your home based off of the AMI or area median income, you will also sell it based off the AMI. And generally speaking, the AMI will go up due to things like inflation, increase in salaries, and other factors like growth. All right, so here are some of the lesser known pros of the program, in addition to getting a huge discount on your home. So number one, once you own the home, there's no limit to the amount of income you can make. Number two is many lenders will often have special mortgage rates for BMR listings. Some of these banks have agreements with the cities to help offer lower mortgage rates and help cover closing costs. For example, when I was buying a property, the market mortgage rate was 4.15%, and I was able to lock in an interest rate at 3.65, a full half percentage off of the market interest rate. In addition to that, the lender covered the majority of the closing costs. Full disclosure, I used First Republic Bank, and as an aside, I want to make sure that you guys are still shopping around for the best rates, because there are some lenders out there who try to take advantage of you. Knowing that you're getting a discounted home, they might try to up the interest rates. And that's something that I ran into personally as I was shopping around for the best mortgage rates. Number three is you'll pay property taxes based off the BMR value and not the market rate value of the home. In addition to that, you may be able to take advantage of the California homeowners exemption. That provides you with up to a $7,000 reduction in the taxable value of your home. And lastly, if you owned your BMR property for 10 or more years, the city may help cover any sort of repairs or renovations that you want to do to the home. All right, that pretty much wraps it up, guys. If there's anything I didn't cover or that you guys have questions about, please leave them in the comment section. I'll be sure to get back to you guys. And there will be more videos on the way, so please subscribe, stay tuned. Really appreciate it. Thank you, guys.